Morgan Stanley launched the Bitcoin ETF 2 weeks ago with the lowest fee on the market. $30 million came in day one. The fee battle in institutional Bitcoin products has officially started. This is the Bitcoin Weekly by Blockrise. Here's what actually is happening. Start with where we are. Bitcoin closed the week at around 63,000 euros, up nearly 6% from 7 days ago. That puts it above the 50-day moving average, sitting around 59,800, and that is the first time in a while. The 200-day average is still higher at about 75,000 euros, so Bitcoin is below its long-term trend, but the gap is narrowing. The weekly range was tight this week, roughly 8% between the high and the low, and that is relatively stable for a week that included an 8% oil spike and the situation at Hormuz. And then 2 weeks ago, Morgan Stanley launched the MSBT, a spot Bitcoin ETF at the lowest fee of the market. Within days, other Bitcoin ETFs updated their own fee structure to compete. The race to offer the cheapest institutional Bitcoin access is officially on. And here's why it actually matters more than it looks. The Bitcoin ETF market with BlackRock, Fidelity, etc. served the early adopter allocator. They built the infrastructure, proved the demand, and opened up the door. But Morgan Stanley entering means something different. Morgan Stanley has relationships with the wealth management segment that has been sitting on the sidelines. The advisor who has a client with millions in portfolio and a Bitcoin allocation question, that advisor now has a product with Morgan Stanley's name on it at a competitive fee rate that has 5 minutes needed to explain. As much as I'm aware and in favor of this development, I see it for the short term. And here's my logic. ETFs are a bridge product. They get wealth management comfortable with Bitcoin as an asset class. They normalize in a Bitcoin portfolio discussion. However, they reduce the friction for allocation discussions. And this is actually useful for the adoption curve of Bitcoin where we are right now. But there's something what an ETF cannot do. It cannot give you the real Bitcoin. You cannot verify your own Bitcoin on chain. You cannot directly use it as collateral. You cannot sign for your own transactions. You only have exposure to the price of Bitcoin. You do not hold the Bitcoin yourself. And at some point, the people who buy these Bitcoin ETFs will start to understand the difference. They will ask questions. If I cannot verify my Bitcoin on the network, is it really there? And when that question occurs, the answer points into one direction: self-custody. So $1.1 billion flowed into Bitcoin investment products this week, the strongest signal since January. The demand is absolutely real, but some of it will eventually find its way off exchange into real Bitcoin wallets. And that is what I'm watching. Next up, most of the quantum computing headlines this week were noise. Let me give you some context. 2 things happened. First, Bernstein published an article saying Bitcoin's sell-off already reflected quantum risk. The market has it priced in already. And second, Starkware published a quantum-safe Bitcoin transaction scheme that only uses existing consensus rules. So there's no hard fork needed. The mathematics to make quantum-safe computing is already working with the Bitcoin rules today. And here's what it means practically. The Bitcoin network does not need to choose between security and survival. The upgrade path exists within the existing framework. And this would turn the debate about quantum risk destroying Bitcoin from a media narrative to a technical consensus. That's very good progress. And then 2 things for the next 2 weeks. First, if Bitcoin's decoupling from oil and geopolitics holds. This week, Bitcoin held $70,000 through turbulent markets. And that is new behavior. One data point, of course, does not make a trend. However, if this happens again when the market struggles, the thesis might change. Hard money behavior emerging under real stress conditions. And that is worth watching closely. And second, what strategy does with its next purchase. Michael Saylor bought another 13,927 Bitcoin this week. That puts the total holdings at 780,897, nearly 4% of the total supply of Bitcoin. Saylor said 24 hours before the announcement that it was time to think bigger. And with the current pace, strategy will own 5% of all Bitcoin within the next 18 months. And when a single entity controls that share of future supply, the mathematics change and everyone knows. So watch what they do and not what they say. This is not financial advice. It's just my perspective on what's happening on the market based on 10 years of building in this space. Do your own research. See you in 2 weeks, and don't forget, verify your own Bitcoin.